Just so you guys know, I've already got some swing trades running. I opened them right about 5:30ish, 6 o'clock. My trades from yesterday closed in profit at my target. That happened at about 3 o'clock this morning, 1 o'clock this morning, my time. And so the swing trades, I'm targeting 3 to 4 boxes of profit. If I get more, I get more. Once we start trading in a few minutes after the news event, I'll be targeting, 3 pips, 3 pips, 3 pips, as I normally do. I'm just waiting to see what the news is, and then we'll find out if we're going higher or lower. So this is what I'm looking at on the daily chart. Right? We broke out of that trend line yesterday. We found support a few minutes ago at this level here. Right, so we're bouncing off of this yellow line, and the target for me today is this red little dot that you see there. And the reason why I'm looking at this in particular is if I do a Fibonacci from the high to the low, that happens to be 38%. And it also is within our reach. Right, so that's a very appealing target. If we get there, we get there. Right, so ideally I want to sell from there, and so between now and then we may have to be bullish. Okay, so we have to wait and see what this news will tell us in just a few minutes. All right, I'm just getting ready to anticipate the outcome. Where's my so about 2 minutes or so before the news comes out. We have a very small group today. That's okay. That's no worries. Okay. I mentioned yesterday I'm looking at trading futures with you guys, and so I'm really looking forward to that. It will be every other day. I'm just not sure what schedule is yet. I want to operate in the same time frame. I want to operate in the same 2-hour window. Maybe we can just alternate, every other day. All right, let's see. We have about 1 minute to the news. Once the news comes out, we'll be able to.
1 minute remaining for the Eurozone consumer confidence flash.
Once the news comes out, we'll be able to address it. $30 seconds. We do want to sell from higher. Hopefully, sell from resistance. Therefore, we need to break the existing high at 840. If we break the existing high, we become sellers. Two seconds. And it's delayed.
Still waiting.
Waiting. It must be bad news. Let's see.
So we are still waiting on the Eurozone consumer confidence February flash number. Minus 15 spot 5, minus 15 at spot 5 as expected.
Yeah, no change. So we continue. Right, so I want to be buying support on the way to retesting the existing high. Okay, so if we find support in this area around here, we'll be buying. And for those that came in late, the news is out. And so there's really nothing left for us to be concerned with for the next few hours until the FOMC minutes. And so when we look at the daily chart, we have a higher low. We don't have a higher high just yet, but we do have a green candle. And when we're looking at this on an intraday basis, we can notice how we put in the low about 5-6 hours ago, and we're about ready to test the highs, right? So
noting the prior revised Eurozone consumer confidence down to or up to -15.9 from -16 at spot 1.
Yeah, so we're going to retest this area here. If we break through this, then we're testing here, and so on and so forth, right? Ultimately, we need to be testing this, right? So we have multiple ceilings above us. Let's figure out where the floor is, right? So our first floor will be right there 1 hour ago. And if we zoom into this on a 5-minute chart, oops, that's 4, that's 5. If we zoom in on a 5-minute chart, then we can start to appreciate the ladder that we're building every day. Right, so we would expect this to be offering us some kind of support. We want to buy if we get here. That so happens to line up with what I'm doing here. All right, so we have our expectation, we have our plan. If we do create a higher high, so higher than yesterday, we have to become sellers up here. Ultimately, 865 is a 38% retracement, and we want to sell into that. Okay, so let's go to our 1-minute chart. Let's look to our left for an excuse to buy, right? So we want to be buying stuff that is cheap, preferably a red candle, and we want to buy it at some kind of support, right? So this is a nice little pullback. It's not a red candle, but it is one big wick, right? So I'll buy that. And I'm buying this area of support right there, right? So here I get an opportunity to buy a little bit more if it drops down again.
I've posted out the Eurozone consumer confidence February flash report on the feed for anyone interested.
Right, so we're buying. I have my normal size, my normal target, my normal stop loss. I have 16 trades already open that are swing trades, so 16 clicks. And now I'm trading for 3 pips, 3 pips, 3 pips. I will be closing the swing trades higher. And the reason why I want to sell the euro from a higher level is because I still believe the dollar is getting stronger. It hasn't. This is a temporary event. This is temporary. I still believe we're going lower in time. Okay, so as we speak, we're testing this right here. We have our expectations here. And then if we break this, we become sellers up here. All right, so the plan is to sell when it's worth it. Right? Until then, we have to play support. Okay, and then this right here will be the telltale sign. All right, so that's our goal for today, and we're going to approach it through 5-minute steps. Oops. Something like this. Come on. It's hard to zoom into this. There we go. Okay, so here's a red candle. Back to support. I'm buying this right here. And you remember, we're only buying temporarily, right? This is not because we think it's going to the moon. We're buying because we think we eventually will be selling it when it's worthwhile up there. The FOMC minutes, they're coming out in 4 hours. And we're not looking for tremendous changes from the facts that we lived through compared to the minutes, but we are looking for slight changes in the wording that may, prove a different outcome is coming. All right, so if you can buy right here. Right, so today it feels as though we're trading the trend, right? It feels as though we're trying to see the continuation. If we measure the daily candle, I'm sure we're short of our average. Right, so if we measure this, we've only done 29 pips. We've done 3 boxes, and the average has been shrinking over time. We're down to 55, and so we're still missing about 2 boxes. We're trying to figure out, are we adding 2 boxes to the top, or are we going to add 2 boxes to the bottom? Right? We're just trying to assume we will fulfill an average day of work. There's our 5-minute chart, and we're trying to go up the ladder. I'm going to remove this because it interferes with what I'm thinking. There we are. Okay, so in this area here, we're buying supports, and we have our map telling us what is coming up next. If I zoom in, there's probably other levels in here that I can pick off, like so. And this is the same process every day. We have to figure out if we're bullish or bearish. We're not both, we're one or the other. And then we play that side through thick and thin. Whether we're right or wrong. Being wrong, you find out pretty soon. You're in box 2 instead of remaining in box 1 like me here. Right? I'm closing the trades from this box, and the market is moving in my favor, so I'm remaining in box 1. Let me change the color of the boxes just so I can differentiate the boxes from the lines that I'm drawing. There we go. All right, so we're closing another profitable trade, so that's 2. We're about to close a 3rd one. And if it pulls back ever so slightly, I'll reopen some more trades. Right, little pullback right there. I'm buying on that wick right here, that retracement. All right, so if we recall, this is the line we're trying to test for today. This is really the main objective. If we can get to here, we become sellers. Right? And that happens to be 840. So from 840 to 865, the next 3 boxes, we're selling up here. All right, pullback or retracement. We want to purchase that. All right, you're allowed 4 or 5 clicks per box, depending on the amount of money you're operating with. And you don't want to be risking more than 1 or 2%, per box. Limit yourself as much as you can. to the same amount of money per box and limit the number of boxes to 4 each and every day. Right? So now you're building consistency in your behavior. Right? So it looks as though we're climbing the ladder, right? Heading in the right direction. And the goal will be, even planning ahead, the goal will be to, even if you want to, stack pending trades up there. And the market will trigger what it triggers. If it only goes halfway, it only triggers half of your trades. Right? Use limit orders. All right. Let's close a few more winners, trade for 45 minutes or an hour, and call it a day. Call it a day with a plan. If we just stick to the math and follow the average daily range, a bullish day should take us to 850. And so we're just looking to make a slightly higher high in order to fulfill the daily average. And if we go ever so slightly beyond that, we sell. We're selling. So, it's just to get there. We're going to be bulls on the way. Right? We normally don't trade the current move. Like the current move is up. We typically build for the next move. And that's why I'm harping on the fact that we want to sell up here, because that is the next move. Right? We normally don't trade the trend. Right, so let's see a little pullback here, and I'll be able to buy more and recycle the trades that I'm closing. I've closed 3. I only have 1 open. I'd like to open 3. All right, but I can't click at the top. I want to click when it's cheap, preferably support, something like this. All right, if the price comes back to here, I'll buy that. We got to test the highs and then sell anything that's beyond the high. All right, think of it as an outside range. Considering what we're starting with, an inside bar to a bullish candle. Right, so yesterday was bullish, today is inside yesterday. It's an inside bar. We have to assume yesterday's bias. Right, that's the probabilities speaking for themselves. And so if we assume yesterday is again happening today, there's a high probability that we get up here, or at least between these 2 red lines. And that's kind of the goal, right? So here's my red candle, back to support. Here's 1 of the 3. There's 2 of the 3, and there's 3 of the 3. I just put all 4 clicks in my box. All right, going back to the 5 minutes. Let's see what's happening here. All right, we're back to support. It's like we're walking up a ladder or walking down the ladder. The lines are static. The boxes are dynamic, right? I can pick and choose where I put this box, and I measure with the box like I would measure a recipe with a measuring cup. All right, there we go. Now we've been at it for about 20 minutes, and we've closed a handful of winners. Keep this going for another half hour, 45 minutes. Then you guys can all go enjoy your hobby. It doesn't have to be trading. it's probably preferable if your hobby is not trading. You know, trade as though it's a business. That, you know, you go find a new hobby. Go build ships in a bottle. All right, red candle. I have three. I'll open a fourth. In the meantime, my longs, my swings are still swinging. Remember, the FOMC minutes are not expected to rock the world, right? They're just expected to highlight what we already lived through, right? It's a record of what has happened, and it's the wording that we're looking for. And it will, maybe not to you and I, because we're not trained in that domain, but to a financial analyst, they'll be able to see if there's any, you know, differences in the wording. They'll be able to highlight those differences, and the market will react to those differences immediately. And you and I trade the reaction, right? We're not agile enough to forecast the news, let alone read the document and highlight the differences. So we sit back, we watch it bounce around for 2 or 3 minutes, and then we come along and, like ambulance chasers, we clean up the mess. All right, so here we are on the red candle. If you have a click to spare, spend it right there.
Taking a look at the Fear and Greed Index, 65 out of 100 equaling greed, and the Crypto Fear and Greed Index, 78 out of 100 equaling extreme greed. Taking a look at the VIX, currently up 1.82% at 15.69.
Perfect. Everybody is waiting for the NVIDIA numbers to come out after market today, and that should have a huge impact on the S&P 500. So yeah, be careful if you have holdings. Equities might actually move bonds. We'll see. All right, red candle, if you can take a buy. How many do I have? 1, 2, 3, 4. Yeah, I've already got all my money spent. I must wait. There we are. Okay, so just while we're waiting, while I'm waiting to close some trades, let's bring that up. All right, so we started over here, December 14th. We're now over here, February 21st. The account has gone up $2,500. We've put through about 14,000 pips. We have a positive profit factor. Our drawdown is on average less than 10% per click, right? So because we split up our trades into many small clicks, we have a better control over our drawdown. Okay? About 3,000 winners, 300 losers. Okay? Positive results. That's what we want. All right, so if we can back into this box here, that affords me the opportunity to open more trades, right? So this is now my box too. If we come here, this puts me into box number 2. Right? My box number 1 is right there. Actually, if this is my box number 1, I'll pin it right on that swing where I started clicking, and my box number 2 begins here. Right, so in my current box number 1, up at the top there, I have 4 clicks already expanded, and I have to wait for them to close. I cannot open more trades until I come down into this box, and this will afford me an added 4 more clicks. So it's probabilities, and I'm just sitting here waiting to see, right? If you can afford to, right there, take a buy. Right? We're just looking to see for a bounce, right? In this area here, right around there. Let's take a quick peek at this. When I do something like that, and I take this line and I measure this, it's almost the same. And if I take it and I measure this, it's almost the same. Right? And so in my mind, the current leg, this move right now, is almost finished. Right? It's almost average, maybe slightly less, slightly more, but it's average. If it remains average, it should bounce. If it fails to remain average, maybe it's 2 times. Maybe it's 3 times, 4 times. Right? In my mind, I just use average for everything. And we react to things that are abnormal, not average. Right? This is still an average move right here. And there's no reason to chase this. A lot of people will see red, 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 and automatically sell. We see red, 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 red to support, and we automatically buy. Right? And so we may be early on the bounce. I may be buying while it is still falling, right? But I'm testing support. I'm testing an assumption. I'm assuming support is here, and so I bounced. I'm assuming support is 4 or 5 pips further. I can buy more, and so on and so on and so on, right? I'm afforded the opportunity to test my assumptions over and over and over. And when my assumption is proven to be correct, I make money. When my assumption is proven to be wrong, I carry drawdown for an hour or so. And I deal with that drawdown at once, right? That's usually targeting some kind of a break even. This is where my break even is because I'm carrying these swing trades, right? So as we speak, I'm trading in profits, right? I'm already in updraw, right? And so I'm carrying updraw while making 3 pips, 3 pips, 3 pips. The best of both worlds. Right? Remember, the ultimate goal for today is to sell from higher. Right? So if we go and look at this, on an hourly, our intraday scale, we've made a low, we made a high, we made a higher low, we made a higher high, right? Higher high. Will we be making a higher low? And then, maybe this is it here. Are we going higher still? And still. right? Ultimately, we're trying to get up to this zone there. Right? Be cautious of this. Slightly higher high tells the tale, right? It's either an outside range, our famous enemy, right? And we're coming down to make a lower low, or this is a sign that we're going higher. And we have to see how support is holding. And then if you have a particular bias in mind, you're either trading off of that support or you're trading off of resistance. I want to wait until I get into this box here to spend more clicks. I've already put the 5. I don't want to put any more than 5, so I'm waiting. We've been at this for 26 minutes, and we've closed a handful of winners already. We've built a small long position that, with no any kind of consideration, should close all by itself. If we run into trouble, we basically start peeling off losers before you get into box 3. Right? So you start losing in box number 2. You don't have to fight all the way to box 3 and 4. You remember, boxes 3 and 4 are helping you fix boxes 1 and 2. And box 2 is fixing box 1. Right? You're making money, I'm making money in box 1. Right? This is the upper box right here where my trades are. If I end up going into box number 2, the work that I do in box number 2 is meant to average with box number 1. And the average of the 2 boxes becomes my target. Right? So if I have 2 boxes, I'm targeting break even. If I have 1 box, I'm trying to make 3 pips like you see here. Right? It's a change in behavior. I'm trying to make money, or I'm trying to protect what I've built, the position that I've built. Right? So here we are, 28 minutes in. Beautiful, beautiful. Come on. It's just on the threshold of making me 3 pips. Come on. Right here. Ba-da-ba-bum-bum-bum. So if we can get back up to the top there, a couple more boxes. You know, we're still trying to fulfill an average daily range, ADR. You know, we are miles away from an average day. An average hour is only 8 pips. Right? Something's awkward with this. Something's weird with this. What's an average 5 minutes? 3 pips. So it's like everybody's on pins and needles waiting for the FOMC.
According to the IIF, global debt rises to a new record at $313 trillion last year. The IIF on emerging markets as well, they say the debt to GDP ratio hit a record last year as well, driven by increases in India, Argentina and China.
This trade that I took right here, it almost closed. No, it came within a pipette. It almost closed. And that's what will have us on edge all the time. You know, it's tickling your target, tickling your take profit. Probabilities tell us that things are still valid, right? Nothing has changed here. I don't want to be made to think that I'm wrong until the proof is in the pudding, right? They're just trying to get under my skin by stretching it out, by stretching time. What I believe is happening is taking a lot longer, right? I still think we're going up, but we're falling first. Stuff like this, right? They're using time to have you second guess your plan. We don't want to give up on a good thing. Right? We're 2 boxes of profit in on the swing trades, or 1 box now, but it was 2 boxes. Right. We have a lot of discretion within the boxes. Ideally, that discretion will, if you don't manage it, if you're lacking discipline, that discretion will actually get in your way. You're going to put way too much money at risk at once. And what we're learning to do with the boxes is to spread that risk over a certain amount of distance. And then we end up with the average of that work. Right? So instead of having outlandish goals, we create the outcome we're looking for with baby steps. Sorry, drinking my coffee in your ears. There we are. That's what we want to see. Boom, boom. Bottom of the hour, right? That's when I expect the conclusion of the pullback that I tend to exploit every day. Right? So we built a position in a pullback, and now we're expecting to get paid from this. Right? We want a continuation. Starting to sell near 840 would be the key. And then hopefully, we built our shorts by the time we get to 865, if we get to 865. I may be totally wrong, and we just go down from here. Maybe we don't test the highs. Right? This would be a shame. And so if we don't test the highs, and this is a higher high, there's a probability, slim, but still there, that we create a lower low. All right, so be on the lookout. Beautiful. If you can take a click, if your trade did close over here, you get a chance to recycle it. Slow news day. All the positioning has taken place already. You know, when we look at the daily chart, this measure bar that we're working with, you know, yesterday's measure bar is 77 pips, right? Bigger than average. And today we are at 30, which is smaller than average. If you average the two together, we're right in the ballpark. And so it's like Jack in the Box all over again. The big picture remains the same. If you put a Fibonacci on this, the ultimate target for today $865. Right, because we're trading every single day and reassessing every single day, if you show up, you know, and trade multiple 2-hour sessions per day, then you're doing this reassessment multiple times per day. And it's ideally the top down that saves you from you, right? By not playing ping pong, but instead playing ping or pong, whichever one is, you know, necessary, you eliminate the wrong side. You don't trade the wrong side. And so that, by definition, should make things easier. Right? And this is the idea of this intraday chart, because we're only here for a couple hours, optimally. You want to trade whatever you see here as you see fit. Right? So this little push through this area is kind of what we're building into so that we can sell from higher. And we know this. That's been our plan. There it is. That's been our plan the whole day. We're just waiting to see if it's valid. Okay, we're testing assumptions all day long. And we're doing it on the time frame that we can actually afford to lose with. I can afford to lose 3 pips. I can afford to lose 10, 20, 30. I cannot afford to lose a whole day. I cannot afford to lose a whole daily candle. All right, so notice how it's just ever so slightly refusing to cash me out on my trade. It's getting under my skin. Come on. We're still in box one. We've been in box one 39 minutes. The boxes are 1 hour long, and unless we break out of this box, we continue to make 3 pips, 3 pips. Right? The break out of the box will tell you what to do next. You're either making 3 pips in the bullish direction, so adding to your winners, or you're building a bullish position from the bottom up and therefore adding to your drawdown. Right. Today with the news event, I'm curious to see how we're going to deal with the high of the day. There, finally. So, how long has it taken to make 3 pips? It took us 17 minutes to make 3 pips. And sometimes we make 3 pips in, seconds. And there's definitely a lack of volatility, right? And one average bar right now is 1.5 pips. Right? I'll recycle that trade that just closed right there. Right, so the red candle that we're witnessing, I just bought the bottom. And right, so I just recycled my trade right here, and its target is 3 pips away. Perfect. So remember the ejection seat, right? It's not there to literally stop every single one of your trades. It's there to protect the account. Yourself, the risk manager, are supposed to close the losing trades. Right? Relying on the stop loss to do the dirty work is something we don't really want to do. Like sometimes you have no choice, but it's preferable if you close your losers manually when you see them as losers. Right? So that will be a lot sooner than 36 pips. And then that recovery becomes instantaneous, 3 pips at a time. All right, so that's 3 minutes now, hovering at that same level. All right. Are we going into box number 2? Or are we going to stay in box number 1? In about 15 minutes or so, we have the fix, the UK fix. And so there might be opportunities there to see a little bit of volatility. And thereafter, we'll have the bankers close, and at the end of the cash market, we have the FOMC minutes. So I can see why we're slow right now. A lot of selling coming through. You can hear the tick strike in the background.
China's Wang Yi promises Europe that China is to keep opening its market.
So here I am in box 2, taking a 1 click, right? Because we've made it into the bottom box here. That allows me 4 new clicks, of which I put 1 already right there. So now I have 3 clicks, 3 to 4 left for the bottom box. So looking at our 5-minute chart, a few minutes ago we were testing the top rung on the ladder, and then we've been coming down the ladder, and now we're approaching support once again. Okay, so as we approach support, some of us can buy, some of us have no money left, so it's a different situation for everybody. Right, but the goal remains the same. Right. There's click number 2. If I can click it right there. Right. When I'm looking left, I see support here. Right, this zone right there. All right, so there's box number 2. I'll put click number 3 right now. All right, so I have 3 clicks in that second box. And I'm buying the support that I see on the left. Inside swing. And if the inside swing fails, maybe we're testing another one, a different one in the past. Let's remove this, doesn't belong there. All right, so surviving the pullback, surviving drawdown, surviving fear of the unknown is what we walk through. There is no fear of the unknown. If you draw a line here, draw, a line there. Let's see what happens. Yeah. We have 10 minutes to the top of the hour, and then I'll stay with you guys trading for a little bit longer, and preferably we want to be able to start selling in the near, before the FOMC minutes. We want to have a sell position established. If you're trading with MT4, same process. The platform does not make the trader. The trading is happening between your ears. It's the same thing with futures and all the other instruments. You have to create the plan and then execute the plan. And if you know how to lose, then trading is a non-issue at that point. Yeah. Tough tell, tough tell. All right, we're testing the 8,000 level or 800 level again. We've been at this level for I don't know how long now. Right here. Testing the outside range. This right there will have a lot of people jumping ship. So I have two more clicks to spend in this box. I'll put one right at the bottom there, right now. Boom. The inside of that swing is what I'm testing. The pain is real. So, two boxes of drawdown. How much has this market moved so far? On this current leg, 13 pips. Ba-ba-dum-bum-bum. Someone is asking if I use prop firms for this or my personal accounts or funded. Little bit of everything. The strategy works. It's up to you to manage the drawdown. And so by using consistency as the main objective, we try to limit our exposure to 4 boxes and 1% per box. And so, right now I'm showing you guys this stuff in a $5,000, small account. It just proves the point, right? You can adapt the strategy to whatever monies you have. And so if you're trading $100,000 of somebody else's money, you have to operate by their rules. Whereas if you're trading your own, you're free to bend the rules a little bit. And sometimes that's required, so the objective remains the same. Focus on the consistency on the loss side of the equation, right? Learn to lose, and the money kind of it's a byproduct of that behavior, right? So yeah, the account doesn't really matter. The system is scalable, and so if you have 100,000, you can scale up. If you have $1,000, you'll be trading micro lots, but it's the same system. Yeah, you're probably asking because of what's happening in the US with the prop firms. If you're a US citizen, you're probably best to go towards trading futures. Move away from trading Forex or CFDs for that matter. And CFDs is what's causing you problems. And so if you remain away from CFDs, you're in the clear. All right, so there's that big move back outside, testing the outside of the swing, and now we're testing here, right? This level right there. I'll take my, is it my fourth or fifth? 1, 2, 3, 4. I think this is my fourth. No, this is my fifth. So this is my fifth trade in this box. I have to now officially stop clicking for that box. I have to wait for box number 3 if I'm presented with it. All right, if we go to our 5-minute chart, we're testing that support area, that critical support area. All right, so we are there right now. This is the telltale sign right here, right? Are we breaking down through here, or are we bouncing up through here? Yeah, so going back to our previous discussion, if you're a US resident, edge yourself towards futures. Look at trading futures. That way they'll keep you on the legal side of things. Bringing money home, bringing your profits home won't be a problem with the IRS. No, this account was started with 3,000. We started this account with 3,000 on December 14th. And now we're up to 5,500 on February 21st. All right, so we're buying support and we're wanting to be selling resistance, right? But not when stuff is cheap. We want to be selling resistance when stuff is expensive. Right, so the problem is when you see things like this right here, red, 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 your brain will go crazy and this fear of missing out kicks in to gear, and then all of a sudden you're selling things because it's all red, but it's red at support. And so a probability exists, right? And the probability tells us a bounce might still be valid. And so we structure, we position, we build for the bounce. And then a breakout, if it is a breakout, will survive. We will survive. And look at this. We were just talking about that a minute ago. Right? What if it just pushes ever so slightly outside and it becomes an outside range, right? A trader's worst enemy. Right? We were just talking about that 15 minutes ago. The joys of trading. Yeah, if C Trader is better than MT5, I think so. I like C Trader more than MT5. I've never been a big fan of meta quotes in general. MT5 is a good step in the right direction, but it's still a meta quotes product. C Trader is today's technology. You know, let's remove this because it doesn't apply anymore. And let's draw it over here instead. There we go. All right, holding support, right? That 8,000 level or 800 level. It may just cause a lot of grief and create an ever so slightly lower low, testing this level here. I wouldn't put it past Mr. Market to hurt more people. All right, that's what it tries to do. It's not here to give you free money, it's here to take it. Right, so a lot of people got stops hiding back here, just like they had them hiding here and hiding there. We don't know the future, we're just trading probabilities. And my probabilities tell me this is holding, and I want to buy that. Okay, now I'm officially done. I can't take any more trades. All right, watch it make an ever so slightly lower low. All right. We've been in the UK fix for about a minute. All right, the fix is just starting as we speak. Curious to see what comes of it. Right, so swing trading experiences drawdown, experiences whipsaws, experiences moves in both directions. My swing trades themselves have a 36 pip stop. And so I'm really looking for a 36 pip target, right? I would love to see a move up here and I'd be able to close all of my swings at once. And on the way up, I'll be closing my 3 pips, 3 pips, 3 pips, 3 pips at the same time. All right, so I built a position. I only used 2 boxes worth of risk. I have swing trades. That's a separate page in my playbook. The goal is the same. I want to be selling from higher. I'm just taking advantage of one pool of money with 2 different playbooks, 2 different plays. Right, so if this is support, we shall find out soon enough. Just to, there we go. If I can bring this into view. All right, so the dollar index for the last 4 hours has been hovering around this resistance area. The yields have finally started to move just a few minutes ago, about an hour ago, in the last little while, right here. And so that's kind of what is causing us that grief right now. Right? This is what we want to see hold us up. Oh, this might become an issue, right? This might become a problem. Is support going to hold? Right there. Right? Remember, losing in box number 2 is the cheapest place to lose. Right? By the same token, if you want to fight this, you're spending money averaging 2 boxes together. Right? If it goes into box number 3, you're spending money averaging 3 boxes together. And ultimately, you have a chance to do so here also. Right? And all the while, you're looking for one move in that direction. Right? And so as soon as you start building a position, the outcome becomes breaking even or better, right? You're targeting the outcome at break even or better, right? So my break even is this white dotted line here, and that so happens to be about 5 pips away, right? So if the market can just pull back 5 pips, I can close everything that you see here and not lose a penny. If it goes beyond that white line, I close trades and I make money along that direction. What is happening here? Is it going to find support? Or is it going to fail and just keep going down, 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 right? Do we want to fight this? Right? Do we want to fight with this? If we measure, that has been 2 boxes exactly. And it's not abnormal to see a pullback. You know, this is what you would expect to see, right? Going back to our famous trader's worst enemy, right there. I hope nobody's jumping ship. I'm still long. I'm still long off of support. It's only moved 2 boxes off of the high. There's no reason to throw in the towel here. I'm just going to move this off to the side and watch. If you were able to, you probably put some clicks at the bottom of that box there. Beautiful. When a plan just works.
ECB's bunch says it may be too early to get hopes up on rates.
If you're wondering what that noise is, this is the tool that I use. It's called Financial Juice. And so you can listen to the news and you can also listen to the tick strike.
And ECB's bunch says wage pressures are high and labour markets are tight.
And so it saves me from having to keep an eye on the calendar all the time. I can just listen to what's happening. And they have a huge sale on right now. It's 92% off. You basically, $100 for the year. So yeah, comes in handy.
ECB's bunch adds that I can't exclude policy staving tight for longer than seen. That's bunch saying I can't exclude policy staying tight for longer than seen.
All right. So the market has moved 1 standard deviation and back. Let's see if it's going to come back a 2nd standard deviation and maybe a 3rd and 4th. All right, so it did give us an outside range. It has removed the weaker players from the game. And those of us with a long tail stop are here to tell the tale. All right, so we're back to the center. We are above the 800 area. All right, so as long as we get above and stay above, that still holds well for us. Right, there's another 3 hours before the news comes, the main event. All right, if you can buy support right here, buy it. I'll put 2 there since I closed 2. All right, so those of you following along, I've had a handful of winners, maybe 10 or so. There should be a few more coming. And then in the next 40 minutes, I'll be able to stop the recording. Yeah, someone's asking where these came from. I put these trades on at about 6 o'clock this morning, 2 hours before the live session. Right, the goal for those is 1-to-1. And so if I'm risking 36 pips, I want to get, if I'm risking 4 boxes on those swing trades, I want to get at least 4 boxes of profits out of them. Right, and so I'm looking for a move up here. Yeah, they don't have targets. These don't have targets. Everything else has a 3-pip target. These don't have any targets. It's a different book in my playbook. It's a different page in my playbook. I'm an opportunist. And so if I see an opportunity and I know I'm here for a couple hours, whether trading by myself or with students all day, I might as well take the trade that I see fit. I do run multiple accounts. It's not just what you see there. I'm showing you just a sliver of what I'm actually doing. The main objective behind this 3-pip strategy is to instill discipline. If you can leave the casino every day, you're leaving the casino on a high note. You're leaving with your profits. And so instead of over trading and giving it all back same day, hours later, just leave. Do your 20, 30, 40 trades and leave. Most people, they get on the roll and they give it all back hours later or minutes later, the same day, over and over and over and over. I used to target 2.7 pips, and now I'm targeting 3 pips, just for simplicity's sake. And some of the people that follow me, their platform doesn't allow for them to put partials. And so it's easier to just round up to 3 pips. It is typically an average bar at the right time of day. Right now, right time of day, but the bars are smaller than normal. I'm not changing my target. I'm just waiting longer to make the same money. It used to be 2.7 pips, and then I would make 25 cents a trade or so. Now I bumped it up a little bit and I make, it's ever so slightly different. The idea of targeting 1 bar of profit, so it doesn't matter if I'm trading the 1 hour chart, I'm still targeting 1 bar of profit. It just happens to be a 1 hour bar, right? So I'm trading the 1 minute, I target a 1 minute bar. Typically, my 1 minute bar is about 3 pips. Today is just off. So I'm not going to adjust just for today. Right, so red candle, I'm back in box number 2. I'm putting the 4 clicks back in. 1, 2, 3, 4. And so the 4 clicks I just put in belong in the bottom box, but I'm hoping they're going to close in the upper box. All right, so I'm just recycling the same trades. I'm hoping to catch the next leg up. Just a few more minutes. That famous outside range, this killed me for years, years and years and years. When I was trying to only swing trade and only do swing trading, or, positive risk to reward ratios. When I did positive risk to reward ratios, outside ranges, which basically happen every single day, would take me out of most of my good trades until somebody clued me into this long tail stop business. And then within that long tail stop, you have all that space that you can use to operate within. And within space, you make money. Right? So I still have a 36 pip ejection seat, but my job is to not eject. I'm trying to not eject. A long tail stop is to protect you from the wicks that you never saw coming. Your stop is further out than what a average market move requires. Right? So I'm looking to survive an average move against me. In which case I'll be exploiting that average move against me. Like I'm doing now. Market is falling and I'm buying it. Because it's falling average moves, contained to less than 36 pips. Right? It's falling towards my stop loss. And I'm buying it. Right? That's why I need that long tail. Think of it as needing a wick on the daily candle to go and take me out. All right, so are we right with our bias? Are we right with the outcome of the day? So far, so good. The news is what will determine tomorrow. And so this buy the rumor, sell the news, that is more or less what we do. In our case, intraday traders, it's to our benefit if we can actually avoid the news, right? So I'm hoping that I clear out my longs in time for the FOMC minutes. Wait for the FOMC minutes to come out and then put the shorts on. Right? I want to be reacting to the news event. I just have a plan. I have plan A figured out. I have plan B figured out. I have plan C figured out. I just don't know which I need until I get there. All right, I just want to see some more of these trades close like this. And then I'll be able to stop the recording and call it a day. There we are. Right, so a green candle. I don't want to buy the top. I want to buy when it's cheap, so I need to see red. And if I can see red, preferably at some kind of support like this right here, that would be an awesome place to buy. All right, the box is just a a way of envisioning what the market can do, right? The market moves boxes upon boxes upon boxes. And so if this is a low right there, then the market has the ability of coming all the way here without pushing or pulling, without any reason to go there. It can just on its own. It just like it does it over and over and over. And so knowing that it's possible and there's a probability attached to this, we trade that probability, right? And typically we try to align one time frame with a higher time frame. And so that probability becomes that much more effective. All right, so here's that red candle, and I forgot to click my mouse. 1, 2. There we go. I'm recycling the trades that are closing. If I close one, I put one back on. If I close two, I put two back on. I just don't want to borrow from Peter to pay Paul. This is looking good. Average daily range is still contained, right? We have not extended on the day yet, I don't think. The day should be 55, and I don't think we've extended it. No, we're still at 30. We're still trying to figure out where the two missing boxes are going to come from. I suspect the two missing boxes are coming at the top, and then we're going to be selling up here. Come on, come on, come on, come on. Let us recycle some trades. Boom. Beautiful. Yes, yes, yes. I should not be cheering. We're supposed to be monks, right? We don't care if we win. We don't care if we lose. We're just here to execute, with excellence. We're looking for excellence, not perfection. Not. All right, red candle. If I can see a little bit of a retracement, just give me a wick, give me a pullback, give me some kind of an excuse to buy this, and I will recycle the trades that have closed. All right, so we built a position on the way down. We exploited one specific time of day, and now we're reaping the rewards, right? We have postponed gratification, and we get paid all at once. And then we have the plan, or a plan, for our next move. All right, pull back, red candle. I'm buying 2, 1, 2, and I'm buying this right there. All right, famous outside range. It probably hurt a lot of people today. Right? Guys that have a trend in mind, all of a sudden their trend is proven wrong, only to be right in the end. Oh, we've recycled some already. I'll put one more right there. So I have 3. So I have 3 here, plus 1, 2, 3, 4 up at the top. I have 7 open trades. Let's just see how much further we can go. We're well above our break even. All right, so we're in draw up, or up draw, which is the right term to use. Up draw, $26. Red candle. Oh, here's click number 5. Right. We're just waiting to see if we can get the ability to close some of these trades, hopefully all of them, before the news in 2.5 hours from now. And then once the minutes have come out, we can start trading again. Or maybe not a good idea because of time of day, but at least we'll have an idea of what to do for tomorrow. Okay, so just be on the lookout for the next, 2.5 hours. I suspect we're going to test higher highs and then crumble once the news comes along. Okay, so I'm going to let you guys go. We're going to call that a wrap. And you have a plan of action. You know what to do for the next couple hours. You know where you're wrong. You know where you're right. And then hopefully with Mr. Powell and the minutes will be ready for tomorrow, right? Safe and clear. Hopefully you'll be flat by the end of the day, and I wish you luck. All right, talk to you guys tomorrow, same time. Trade safe. Bye-bye. Don't touch your stop losses. Bye.